Hi there. Well, we've titled this edition of The Pulse, Reasons to be Cheerful. And we think there's just so much pessimism out there in markets at the moment that perhaps they're overreacting to what might be the slightest piece of bad news. For example, if inflation comes in slightly ahead of expectations, especially, for example, in the US, where we've seen inflation's actually gone down this month compared to the previous month, but markets were expecting inflation to go down a little bit further, and they reacted badly to that. So we've seen a lot of volatility in markets at the moment just because of this kind of overreacting to every little piece of news. And that sometimes has been positive. We've seen some days where the market has bounced really sharply, and also some negative as well. But generally, we always think is when investors are at their most negative, they're most nervous, that tends to be not a bad entry point to buying equities. You tend to find that returns over the next 12 months, for example, tend to be pretty good after a point when investors are negative. The flip side is also true, of course. When investors are very exuberant and optimistic about the future, they might actually be overexcited and markets are too high and need to correct. In fact, one of the most interesting points of data I found recently is that every time CNBC runs one of its Markets in Turmoil specials, which they do from time to time, so far in the past anyway, 100% of the time the market has gone up over the next 12 months, and the average return has been about 40%. So, that who's to say what's going to happen from here, but we just think markets are being overly negative. Markets are worried about high inflation, rising interest rates, and now they've moved into worrying also about fears of a recession. Now, I think there's very much a circular relationship, if you like, between these three factors. I don't think they can all happen at once. It's possible, but I think it's very unlikely. If the high inflation, which as we all know is worrying lots of people, if that tips us into a recession, well then I think central banks won't put up interest rates in the way that they have indicated they're planning to at the moment. Also, if we went into a recession, it tends to reduce demand in the economy, and that in itself can actually bring down prices. So I just feel like there's so much bad news in the markets at the moment. And if we look at one point late last week, the Nasdaq index of tech stocks in the US was down about 30%. And earlier this year, markets were more worried about interest rates going up. And perhaps at that point, the market might have been down 15%, shall we say. Since in the last few weeks, markets have started worrying about a recession. It's then gone down another 15%. As I said, I don't see that a recession and rising interest rates are likely at the same time. It's possible, but unlikely. So if just one of those factors were to go away or be less bad than expected, then I think markets should at least come back half the way. So I'm quite optimistic about the future. As prices have got cheaper in lots of things, actually that means they look better value in my view, and think that returns from here could be pretty decent. Obviously we're all worried about the cost of living, and we know that could hit the economy, but markets are forward looking and they've already factored quite a negative outcome into the prices already, and we only need it to be slightly less negative than people expect, and I think markets could rebound. So thanks very much. See you again next time.